You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody, that music means we are back once again. Time to talk about all the action going on in the world of crypto derivatives. Yes, it is time once again for the Crypto Rundown. My name, of course, Mark Longo from theoptionsinsider.com. Reminder, if you're just listening to the Crypto Rundown, man, you're missing out on nearly a dozen other programs, including the Option Block. Just had it a couple hours ago here on the old network. So if you're even remotely curious about these options things, make sure wherever you're listening to this, hey, if you like what you hear, throw a like, a star, a comment. It does help new people continue. We've been running this network for over 17 years now, but surprisingly, there are new people out there every day. Let them beat a path to our door. And of course, if you want to beat a path to some new content, make sure you're subscribing to the full network. And of course, for those of you who want to go above and beyond, you're ready to take the plunge, theoptionsinsider.com/pro is the place to go. Awesome pro Q&As coming up there every week, as well as options oddities, as well as, of course, early access to a lot of great content, giveaways, live streams, all sorts of fun. Theoptionsinsider.com/pro is the place to go to get access to even more great content, including a lot that dovetails into the realm of crypto these days. So check it out if you are indeed crypto curious, as I'm curious who's joining us on the Crypto Hot Seat today. So it's time to find out.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listeners. And next up on the program is a newcomer to the program and indeed to the network. She is Kristen Mierzwa, the head of digital assets at FTSE Russell. Kristen, welcome to the Crypto Rundown program.
Hi, Mark. Thanks for having me.
And Kristen, as we are wont to do with all of our first timers here on the network, why don't we go ahead, give our audience a bit of an overview of your background in the financial markets, as well as what the head of digital assets does over there at FTSE Russell.
Yeah, sure. All right, my name is Kristen Mierzwa. I'm the head of digital assets for FTSE Russell. If you're not familiar with FTSE Russell, we are an index provider that's fully owned by the London Stock Exchange. And we have been in the digital asset space since 2019, offering indices that cover up to 400 digital assets. And what I mean by digital assets are things like Bitcoin, Ethereum, Solana, Dogecoin. We do have stable coins in our universe as well, privacy tokens, and just keeps going on and on. We at FTSE Russell are very committed to this particular asset class. We knew back in 2019 when we signed a partnership agreement with Digital Asset Research that this technology of the protocols was here to stay. We knew it was a growing asset class and it would take time for it to mature and catch up to the equities, fixed income, and commodity asset classes. But here we are 5 years later after starting this endeavor, and now we're talking about digital asset derivatives with you guys. So very excited to be here.
Yeah, we're happy to have you because we talk about FTSE Russell products a lot here on the network. I think for a lot of our listeners, they're obviously familiar with you guys through, of course, the Russell 2000 and indeed the Russell 1000. Catherine has been on the network a number of times. We used to have Sean Smith used to be with your firm on our This Week in Futures Options program, literally every week, talking about all the things going on in the world of equity derivatives. So most people are probably familiar with you guys through that lens. Of course, the Russell Recon, which just happened a few months ago, is a big time when everyone's looking at Russell as well. I think a lot of our listeners are probably less familiar with your digital asset side, Kristen. So I'm intrigued to dive into that a little bit. Before we get to that, really quickly, I'm curious, for a lot of our guests coming to us from the world of, let's say, traditional finance, they all had that moment, that inflection point, whatever it was, so they said, hey, maybe there's something more to these crypto markets than maybe I initially assumed, and maybe it's worth diving a little bit deeper. But what was that moment for you? What was it that lured you to the dark side of crypto, Kristen?
It was when we were working on our partnership agreement with Digital Asset Researcher DAR. The vocabulary words that were used to describe what kind of data we would be bringing into our system were new to me. So if you're working on a contract, of course, you're going to go Google and figure out, what is this airdrop? What are we talking about here? What do they mean, digital asset exchange exactly? So once I started getting my head around some of the things we were contracting for, I think like so many other people, you start YouTubing and learning more about the technology and protocols, and really fell in love with the whole space. So much of it is borrowed from traditional finance, but the vocabulary used to describe whatever the use case is or the way the transaction may be taking place decentralized has just playful vocabulary around it. So it's just been really fun to see almost another generation kind of approaching the financial services markets through a different lens.
That's what the show is all about, the intersection there of, traditional finance and this new lens, as you put it. So for a lot of people, that's how they view finance now, which is interesting, a little bit terrifying at the same time, too, which also makes it fun. I'm excited. We have some new products to talk about. But before we get there, you mentioned some of your digital offerings. Let's get into those a little bit deeper because, of course, those are the indices upon which the new products are based. Of course, we're talking about the FTSE Bitcoin and indeed the FTSE ETH Index. So let's start there. Again, a lot of our listeners may not even be familiar with these. Walk our listeners through these indexes. What are they? How are they calculated? And then we'll get into some of the fun products on them.
Yeah, sure. So I think, what I could share is a little bit lessons learned when I, first started working with how do you calculate an index, even if it's tracking just one single asset. Is very different than how you would approach the equity world. So we need to start with, where do you get a price from? In equity, you would take that price from the primary listing exchange of that particular security. In the world of digital assets, they don't trade on a single exchange. They trade on hundreds of exchanges. They trade wallet to wallet, more like OTC trades as well. And then on a whole nother term, that I had never heard before when I started working on this, and that would be DeFi exchanges or decentralized exchanges like Uniswap. So when we were putting together how are we going to figure out what is the price of Bitcoin so that we can build an index, we needed to think about our users are institutions, and they're most likely going to need to use centralized exchanges that have very high governance, meaning an exchange like a Coinbase, Kraken, Gemini that has strong KYC and AML policies that you would expect from exchanges like the London Stock Exchange or New York Stock Exchange. We needed to make sure these exchanges had great market surveillance, that we weren't seeing manipulated data on the exchange, because again, we're trying to apply a price to something and we want that price to represent real economic buyers and sellers of the digital asset that we're tracking. So we put in a governance framework on how to evaluate these centralized digital asset exchanges. And we knew 5 years ago, this marketplace is growing, maturing, there'll be M&A, some of these exchanges will come and go. So we wanted to have a flexible framework where any exchange that has things like the proper license and the jurisdiction that they're running in, we can identify a C-level executives who are running the exchange. We didn't want to be working with anonymous characters where if something goes wrong, who do you call? We needed to make sure they had client service phone numbers so that we knew participants on the exchanges were being serviced as you would expect from other broker dealers that people use. And long story short, with getting this framework put together, we were able to screen out FTX. So they didn't quite pass all of our criteria. Of course, we were monitoring them because the volumes on that particular exchange were huge. But I think we're all really happy that in partnership with Digital Asset Research, our methodology works.
Why wouldn't you want FTX? I'm confused. Why wouldn't you want that in your list of venues?
So yeah, I know they.
I was joking, by the way.
The volume, but yeah, so we were really, really happy that we were able to screen them out. So there were two things that why they weren't in there. One was we do an annual RFP process with the exchanges, and they weren't willing to engage on that at that point in time, and I'm sure now they would if they were around. And then they also didn't have the same KYC and AML policies that we're looking for in exchange. So we want a zero tolerance that any level that you're trading with an exchange, you need to disclose your identity with that exchange. And they had, at that point in time, you could trade, I think it was $1,000 or $2,000 worth and not have to share your identity. And for us, we had zero tolerance on that. So that was pretty exciting. So we get through this process, we get a group of exchanges. So we've got multiple pricing sources. And that's also very different from equity. Instead of taking a single primary source, I've got multiple sources. So then you have to think about building a model and how do you pull that price together to represent the market. This is a 24/7 market. It doesn't belong or domicile into one country. So that's a different thing you kind of have to get your head around, a little bit more like FX, right? So it doesn't trade just in one place. This is a global economy we're working with. So we took the approach of representing 8 different pairs of trading activity that could happen on these different exchanges, and then taking those pairs, normalizing them to US dollar, and then the next step would be how do you weight all of this data that you've pulled in from these exchanges to get you your 15-second tick. And what we did was a pretty simple process, and that's just VWAPing based upon the volume associated with the trades on those exchanges. And to just be really clear, we're using executed trade data from the various exchanges. So we have 8 exchanges today that we pull all that data together every 15 seconds. And then to create an index, we use a model where we time weight the 15-second tick and fix it on the hour for our derivative partners. So that was a lot. Is there anything in there you'd like me to go into more detail on, or
I think we got the broad strokes. You mentioned your derivatives partners. I do want to get into the products a little bit too, because that's of course where the rubber meets the road out there. We had futures launched, I believe, last year on your FTSE Bitcoin index, April of last year. Now you're coming around the other side and adding ETH to the mix and ETH options with our friends over there at Eurex. In fact, ETH just launched last week, these options on August 12th. So a new addition to the portfolio, a lot to break down there. Let's go over some of the specs there as well. What are we looking at in terms of contract size? And since this is the first time we've had you on, let's talk about the Bitcoin as well. If folks are looking at trading options on these, what are some of the contract size? How do they work? What are the expirations? All the fun details.
So I should have had my Eurex team here too, because they could give you more of the exact details what's going on with these guys. But it's working just like the other FTSE options that you're familiar with, like you were saying, the Russell too. So there's an expiry date. We fixed for that, and then they just roll from there. So the trading activity, I believe on Bitcoin last week when I was talking to my Eurex colleagues was over 600 contracts a day. Ethereum just started, so it's going to be quite modest until that market kind of matures a bit. But we're very thrilled with how the product has been up and running and the adoption in the marketplace. These contracts, of course, Eurex is based in Europe, so they fix at 1700 Central European time, but the markets are open, so you can trade right through the end of the U.S. day with the Eurex team directly. Hopefully that answered your question on that.
You know, it's interesting because for a while here in the crypto derivative space, it seemed like everyone and their mother was pivoting towards physically settled contracts. That was the hot new thing. Bakkt was doing it. You mentioned FTX. They were doing it for a while there as well. Of course, the use case there is covered calls and selling to get rid of some of your spot, and also selling puts to get into some of the spot. So that seemed to be an appealing thing. And that lasted, I want to say, for about a year, maybe two. Then it seemed like everyone pivoted away from that. It is moving now towards cash settled. You folks and the Eurex folks decided to go that way as well, opting for cash settled options as opposed to physically settled. I'm curious, why did you opt to go that route? And do you think the days of the physically settled derivatives, are those behind us, Kristen? Are we moving on from that?
I'm just guessing here, but I think it was the partners who are working with Eurex were probably limited by the regulators and what they could take onto their books. So moving cash around, if you're a market maker, and hedging with these products from a regulatory standpoint was probably easier to get approved than taking physical delivery of the digital assets. A lot of the banks are still not quite there in terms of being able to hold that on their balance sheets. So this is a way to make sure we're engaging with the entire ecosystem.
And you mentioned banks and earlier the institutions that are your primary clients over there at FTSE Russell. Clearly these products are geared towards that institutional audience as well. I mean, the newest contracts just launched last week have a contract size of 10 ethers. That's a pretty large notional value contract. I'm curious, I know this is not your product, it's a Eurex product, but do you think maybe down the road there will be some wiggle room as well in terms of maybe making something a little bit more retail friendly? I mean, 35,000 notional, that's a bit much for folks to bite off, but if you're going for the institutional crowd first, it makes a certain amount of sense, Kristen.
Yeah, I think they will as this keeps developing. We're already talking to them about, okay, what's going to happen next after Bitcoin and after Ethereum. I think that this market, now that people are getting comfortable with it, will change quite quickly. Remember, this is just 5 years ago that we really pulled this together and that the community's been working on it. And what I think is really interesting is as soon as people want more regulation, they want more clarity because nobody wants to misstep with a regulator. So every time there's more regulation, I think people build towards that. In Europe, they've got MiCA standards that are coming out, which helps custodians and anyone working in the space understand what they need to do to be compliant. And I think everybody wants that. Again, just so you have certainty over what you're building is going to be fit for purpose. And I think we will see baskets of digital assets in the derivative space in 2025, 2026, when the regulators get comfortable with these single asset products. And then one of the questions we've gotten a lot from people wondering, okay, why Bitcoin, why Ethereum? I think your audience definitely is interested in trading the volatility of the products and understand their different instruments, but there are still a lot of people out there that think a digital asset, why do I need more than one digital monetary protocol? And I think, it really helps them when they launching Ethereum to understand that Bitcoin is more to be a store of value, and Ethereum is this ecosystem play on a smart contracts platform and has many different use cases that are different from Bitcoin. Do you feel like your community's asking those same questions, like what is the difference between Bitcoin and Ethereum, and why do I need both contracts out there? Do you feel like this group is up the curve on the difference between the two protocols?
A large percentage of the audience for this program seems to be down the rabbit hole quite a bit. So they've already made their choice. A lot of them seem to be lining up on the Ether side, which is why I think these new products we're talking about here will definitely resonate for them. I think for the lion's share of the quote-unquote hardcores, Ether and maybe some other projects are really top of mind for them more than Bitcoin. Bitcoin seems to get a lot of the mainstream attention and certainly suffers a lot of the regulatory slings and arrows. But it seems like ETH and other products, Project Solana and others, really do seem to be capturing a lot of the mind share of, shall we say, the hardcores who tune into a program like this. But, speaking of the digital asset space in general, I do have a question for you along those lines, because you are joining us at an interesting time. We just a few weeks ago saw a massive sell-off in the broad equity space and pretty much in all assets across the board, including crypto, which kind of brought back this question we've been debating on this show ever since we launched this show. I want to say back in early 2018, somewhere along that time frame, which is really, where does crypto fall in a modern portfolio? What role does it play at the end of the day? Early on, people thought it was a digital gold, and then I think maybe we've seen maybe not so much on the digital gold front. And then people said, well, maybe it's uncorrelated. It plays an uncorrelated asset class role in your portfolio. Then, of course, we've seen recent market shocks where Bitcoin, ETH, and most of the other major cryptocurrencies sold off far more than the rest of the market did. So kind of proving that old adage that when it all hits the fan, correlation tends to go to one. Some people say it's really nothing more than just another high-tech allocation in your portfolio. So it seems like the recent movement in ETH and Bitcoin in particular have rekindled this debate about what role crypto really should play in a modern portfolio. So I'm curious for you and the FTSE team, you're crunching the data day in, day out. So where do you fall in that debate? What role do you think crypto should play in a modern portfolio?
So all of the above. It really depends on what you're looking for. Our clients are global again, and we work with all client types. So we certainly have clients who, like the derivative space, are really interested in vol and maybe are more interested in that feature of this asset class than anything else. I've got clients who are interested in momentum, like a global macro momentum play, and they don't really fuss too much where the momentum's coming. They're just looking for some additional momentum alpha for their portfolio. And then you still have people who think of Bitcoin like digital gold, and it's an inflation hedge or a store of value. So they would sub it in where they would have that kind of allocation, maybe in their commodities portfolio. But I think what everyone can agree upon is the information ratio of this asset class when you add it is quite high. So wherever you want to maybe put it in your portfolio or allocate from, is it your alts bucket? Is it that commodities bucket? I agree. It could also be taking some of your alternative tech allocation and putting it here. It really complements when you blend it with other asset classes. You just get a really nice IR number. So all of the above.
All of the above, a little something for everyone in the crypto space out there. Well, you mentioned earlier you're focused squarely on the institutional side of the space. That is an area of the crypto market where we've seen a lot of debate as well in terms of what really is the institutional demand or even interest in crypto. I've often joked on this program in particular that it seems like institutional demand really ebbs and flows with the price of Bitcoin. When Bitcoin's sub 20,000, the institutions don't really seem to be motivated. When it's back up 50, 60,000, they seem like they're a little bit more interested. I've said that, it's jokingly, but really only half jokingly at the end of the day. But of course, you have your fingers on the pulse of the institutional demand for crypto these days, Kristen. What are you seeing out there in terms of, are the institutions, are they excited about crypto again? Are they hitting you folks up over there at FTSE Russell with more inquiries, more questions, and more fuel for the research? Or what are you seeing out there from an institutional demand and interest perspective?
Yeah. So it's been great. I would say 3 years ago, if we were talking to our asset owner community or the consultant community about digital assets, it was hard to get those meetings. People just, we're all busy. People didn't want to take that call. Now I feel like everybody wants to talk to us about it, and they're in various stages of an education around what are these. Now I need to start thinking about it. I can't ignore it. It's not going away. So I find that quite promising. And remember, a lot of these asset owners, and by the way, you did see SWIB, this is public, the state of Wisconsin Investment Board make allocations to the Bitcoin ETF. So they are allocating. But a lot of these institutions have a fiduciary responsibility for the participants in their plan. And even if they do believe in this asset class, they believe in the protocols being, underlying a lot of the technology of Web3 and the future and how we interact with each other. They're really looking for a balance sheet so that they can show, hey, this is the intrinsic value and this is why we're invested in this. So because these aren't listed securities or companies, you don't have a balance sheet. However, you've got lots of other great data that we're working on here at FTSE Russell to make it more accessible. So this kind of data can be things that are run on the blockchain nodes themselves. So you can look at transaction throughput in US dollar, number of transactions. You can see that how concentrated the network activity is, meaning like, are there two people or two wallets trading with each other? Are there thousands of different clients interacting with the protocol? You can look at the fees associated with these protocols, and you kind of can think of that as a revenue source. So how much does it cost to create an NFT on Ethereum? You have to pay a gas fee that goes back into the protocol. And again, you could think of that as a revenue stream. So to get to that data, I think players on the TradFi side, like FTSE Russell, needs to start incorporating that in our fact sheets and getting that data out there so people feel comfortable. There are some quantitative metrics that you can look at and really know how healthy is this protocol, because that's the main reason you're looking at a balance sheet too, right? You just want to know like how healthy is this company and prove why you're making a play and investing in it. So we're having those conversations all the time these days. Again, it's quite positive, and I think everyone is taking a really open-minded approach to it, where you didn't see that even 3 years ago, where I think people could just dismiss and say, it's a fad, it's going away. But I think with the success of the U.S. listed ETF, it's hard to ignore it at this point in time. So I find it quite positive.
Sounds like it. You're very excited. You're making me excited here, Kristen, with all your optimism is spilling over here on the show. I should mention we were talking about the Eurex products earlier, but you also have a partnership going on with Cboe. So really quickly, hit that up for our listeners. What are you working on with Cboe, and what can they expect coming from that?
Yeah. So they filed for cash-settled options here in the U.S., and we're just waiting for the SEC approval on that. No indication on timeline there, but, I'm hopeful that we'll see something in 2025. Would love it to be sooner. So that's very exciting as well. And then both of these partnership. What has been interesting to me is on the news of the Cboe announcement, and then of course on what we already have up and running with Eurex, we have lots of clients coming to us again globally who are very interested in index option strategies like buy right, put right, that kind of thing. So I think you'll see that in the not too distant future as another kind of product innovation that the industry is really looking for. I'm sure you guys talk about that all the time on this program, the ecosystems around the Russell 2000 and those types of option strategies.
Yes, a lot of interest in that neck of the woods in our audience out there. This has been a fascinating conversation. I'm looking forward to all this, how it unfolds. You mentioned waiting for regulatory approval. That unfortunately seems to be the way here in the U.S. right now on the crypto front. I guess I should ask you as well, Kristen. This is a conversation I had with a lot of people in the options space back a few months ago at the annual Options Industry Conference. I'll give you a chance to weigh in on it as well. I will say what I heard from all the folks at the various exchanges and elsewhere wasn't exactly optimistic, but it's a question we received from quite a few of our listeners now, so I'll give you a chance to weigh in as well, which is effectively what is going on with the options on the Bitcoin and now Ether ETFs. Obviously, Bitcoin was approved in January. The Ether ETFs just approved a few weeks ago. So we have new ETFs, spot ETFs, and yet, as far as we can see, nothing in the works on the options side, which is obviously deeply frustrating to our audience. Kristen, you spend your days knee-deep in the digital assets trenches. Have you heard anything behind the scenes, any interesting scuttlebutt you want to share with our audience?
No, I just do know that those ETF issuers are very focused on getting that done. You know, they all of this helps the entire ecosystem, always thinking about derivatives as being the foundation for how any market works. So I think the good work that, Eurex, Cboe, and again, the ETF providers who are trying to get these products going, they understand that these hedging instruments are critical to keep the asset class going and robust, right? And then you get to build so much more on the back of that. It'll be interesting to see, and maybe they'll do all of these options being approved at the same time, whether it be off the back of an ETF or an index. So we'll see.
Well, I appreciate you joining us here on the old crypto hot seat. We have to keep rolling with the rest of our program. But before we go, we like to leave our audience wanting more. We just touched on the launch of the new Ether options just last week over there on Eurex. Hopefully something coming soon from the folks over there at Cboe. If there's anything else you'd like to leave with our audience in terms of a hint or a tease of what they can look forward to coming down the pike from you and the team over there at FTSE Russell, now is the time, Kristen. The floor is yours.
Yeah, definitely baskets. I think thinking about staking rewards and how that works with digital assets will be in the near future. And then the other thing I would just encourage people, I hear a lot of talk that, hey, there's no liquidity after the top 5 assets. And we've got a ton of data showing there is. So there is room for so much more growth beyond just a handful of these assets. Like I said at the beginning, we cover 400 assets. Today, we're looking to keep growing that coverage. So I think there's just a ton of opportunity for people to be trading much more than just Bitcoin and Ethereum in the future.
I like it. Music to my ears here, Chris. We'll have to have you back on then when we're talking about the FTSE Solana Index, maybe the FTSE XRP. How deep are we going?
Oh, yes, definitely. Those for sure. And then I think we could see baskets of up to 50 names in the near future.
Oh, all right. You're getting me excited, Kristen. Like I said, your optimism is infectious. Well, I appreciate you joining us today, Kristen. And in the meantime, if folks want to learn more about any of these announcements we were just talking about, where should they go? What should they do?
Email us at info@FTSERussell.com, and we'd be happy to help. And I have tons of data that I'm happy to share with you. So you can use, again, that client service inbox. If you're like, hey, I want to see that liquidity data, we'd be happy to send it over. info@FTSERussell.com.
There you go. Reach out, listeners. info@FTSERussell.com if you want to learn more. Meanwhile, it's time for us to learn what's going on in the world's leading digital asset, yet it's time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everyone, welcome to the Bitcoin Breakdown. A fascinating conversation. Hope you enjoyed it out there. We always like to see new products, new indices in the offing, because guess what? The more indexes that are out there, the more products you'll be able to trade on them eventually, and that's better for everyone out there at the end of the day. So right now, there's options and futures over there at Eurex. Hopefully something coming soon, pending regulatory approval here in the U.S., but that's a big question mark. The regulatory approval, as we all know, kind of slow in coming these days, but intriguing stuff nonetheless. Let's see how intriguing the world of Bitcoin is, shall we? And the answer is mildly more intriguing this week than last week, at least if you're a bull out there. Last week on the show, we were at 59,078. This week, almost exactly 500 handles north, 508 to be precise, at a 59,586 when we kicked off the show. I had a little bit of a range out here this week, actually dipped down to about 57,000 and change, 57,531 back last Thursday. And the high came after our show last week on Tuesday at 60,609. So a nice little range out there. It's actually a little over about 3,000 handles on the week out there. So intriguing stuff. Let's get out now to the world of vol. Remember, all these analytics brought to you courtesy of our friends over there at Amber Data, amberdata.io, the place to go to kick the tires and light the fires. If you fired them up right now, you'd see that roughly 3,000 handle range I was just talking about on the week. Not enough to maintain the near-dated vol. That's come crashing back to earth ever since the big move we saw a few weeks ago. It was hanging out a little bit north of a 60 this time last week, 60 and a quarter to be precise. That's dropped now to about a 49 on the weekly vol. Let's go out to a little bit more standardized vol metric, shall we? Go out 30 days. That was at a 56 last show. That's coming in, but not quite as dramatically, 51 and a half. So coming in about 4.5 points on the week. And of course, the hodlers, nothing really ruffles their feathers. They were at 62 and 3/4 on the 6-month vol a week ago. This week, 62 and 2/3. So coming in ever so slightly on the week. Let's see what's going on from a skew perspective out there. Last week on the show, the weekly skew was biased to the negative side, to the dark side, but ever so slightly. It was a negative 2.6. Cut pretty much in half this week, down to still negative, but only a negative 1.2 right now out there. So I would put that in the mostly flat range at this point. Going out to the 30-day front, we are hanging out pretty flat. Last week, it was negative 2/3 of a point, so anything within a point is pretty much flat, listeners. This week, we are still in that range, negative a half. So again, the options right now not giving us a heck of a lot of momentum signals in one direction or the other. Let's go out 6 months, and you know that's going to be biased to the upside. Slightly more so this week, though. Last week, we were a positive 3.4. This week, positive 3.9. So hodlers ticking up a half a point out there on the old Bitcoin front. Let's move out to some of the other products you folks like to trade options on, including BITO. 19.15 when we kicked off the show, down about 1/10 of a point. So kind of an unched week at the end of the day. The ADV reflecting that, it was 105,000 last week, 103,000 this week, so coming in about 2,000 contracts. Today, at the start of the show, we had about 45,000 contracts on the tape. Let's see if any more have piled in since we started the show. Not much, about 50,000 total now. So looks like not going to hit that ADV today with about half an hour left to go in the session. And the vol still hanging out at about the same level. It was a 59 last week, 57 this week, coming down a whopping 2 points. In terms of size positions, not much changing out there. It's the Jan 30s and the Jan 35s that are still dominating the tape with 124,000 and about 85,000 respectively. Let's move on to BitX. If BitO isn't doing it for you, allow me to present BitX. And you know what? BitX, not doing a heck of a lot. I guess it is outperforming technically BitO, which is almost unched. BitX was down 60 cents on the show. It was at 27 even pretty much when we kicked off the show. So outperforming BitO, but again, neither of them really doing a heck of a lot right now. The ADV coming in a little bit as well was at 20,000 this week. That's down 2,000 from this time last week. And again, doesn't seem like we're going to be threatening that at all today. There was 9,000 contracts on the tape when we started the show. It's up to about 11,000 now, but still nothing really to write home about. At the money vol in BitX at a 110, down a whopping 5 points on the week out there, listeners. And if you're looking at the size positions, again, it's that 7,100 of the Jan 2026 70s. So yeah, that one we've talked about a few times already. An intriguing choice, to say the least. Let's get out to maybe a product you folks sling more frequently. For a lot of you, this is the crypto proxy in your portfolio. This is Mara. 1635 when we kicked off the show, up about 70 cents on the week. That ADV, though, coming crashing back to earth, 236 now, down 53,000 contracts from this time a week ago. And that's reflected kind of in the light volume we're seeing out there today. Only 148,000 contracts on the tape with a little under a half an hour to go. So it doesn't seem like we're going to be threatening that today as well. The vol also coming back down to earth a little bit as well. It was at about a 90 this time last week, 81 this week, so down 9 points out there. And if you're wondering what is the size position still in Mara options right now, it is 38,000 of the SEP 30s. That's kind of been the top position for a while as well. I do believe that's a bit of a leftover position from the last time Mara really threatened that range out there. You know, if you've been listening to the show for a while, that Mara tends to threaten 30, then retreat from it, get back down to about a 15, then bounce off that level again. It's kind of been this very range-bound asset for the better part of this year. I'm just looking to see when these 30s were opened, and it seems like they've been open for a while out here. They started growing them slowly. They're about 22,000 open in February. That grew to about 7,000 by April, and about 14,000 in June, and then started ticking up even more by the end of June, got up to about 25,000. It's like the peak for the OI on these these SEP 30s was on August 1st, 46,000. So some folks maybe getting the heck out of Dodge on these 30s out there in Maryland. Intriguing nonetheless. Speaking of intriguing, listeners, let's get out to a little bit of the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, listeners, welcome to the altcoin universe. And this is one of my favorite portions of the show. I mean, they're all my favorites. They're all my children at the end of the day. So I love the interviews. I love everything else. But I do love getting into our weekly slugfest here at the start of the altcoin universe. Yes, that's when we're talking about the battle for market cap out here, especially the bottom half of our top 10. That's where the slugfest is really the most pronounced out here. So let's see what we got. Number 10, listeners. Oh, we got a little bit of a shakeup here in our top 10 listeners, as coming in at number 10 this week, we have an asset we haven't talked about in a little while. Dare I say it, listeners, it's Tron. Tron, listeners, coming in at number 10 this week with 12.3 billion worth of market cap out there. So last week we had our old pal Cardano, and Tron was nowhere to be found. This week, Cardano getting kicked to the curb, listeners, and Tron taking the top spot with, again, 12.3. That's roughly $250 million more market cap than we saw at the number 10 spot this time last week. Number 9 staying the same this week. It's our old pal Doge, hanging out at about 14.7 billion worth of market cap. Number 8 is Toncoin. That's also staying the same as well. Obviously ticking up a bit this week, though. It was 16.1 billion worth of market cap last week. This week, 17.1 billion. So obviously adding on a little more. Speaking of adding on, our old pal XRP, 33.8 billion worth of market cap. It was 31.8 billion last week. So adding 2 billion worth of market cap out there in XRP land. Kristen seemed excited by the prospect of an XRP index. Should be interesting, maybe. Coming soon from the folks over there at FTSE Russell. Number 6, we got USD coin. That's about 35 billion worth of market cap. Number 5, it's Solana at about 66.8 billion. It's actually down slightly. It was 67.5 billion this time last week. So same spot, but down slightly for Solana. Number 4, it's BNB at about 81 billion worth of market cap. That one's up quite a bit, up about 6 billion from this time last week. Number 3 is Tether, about 117 billion with a market cap. That's up about 1.3 billion. Number 2, it's ETH, 313 billion with the market cap. That's actually down about 7 billion. So interesting ebbs and flows as we continue to move throughout the top 10. And number 1, the big dog, it is Bitcoin, 1.1 billion, pretty much almost the exact same level as it was this time last week. So did you have Tron on your bingo card for the top 10 this week? Well, there you go, listeners. Then you're a winner chicken dinner. Let's see if ETH is a winner chicken dinner this week. The answer is no for all the hodlers out there, listeners. We were at a 26.61 on the show this time last week. This week, 2608, down a whopping 53 handles. Our range a little bit wider than that. The high came pretty much after our show last week on Monday, 2724, and the low came last Thursday, 2570. So even then, not an enormous range, 150 handle range out there, which is probably why we're seeing vols coming back to earth. Also, again, we saw that just extreme movement a few weeks ago. It's hard to maintain those vol levels if the underlying doesn't keep moving. And that's pretty much what we're seeing out there right now. Weekly vol on the ETH front was a 77 this time a week ago. This week, 59. So coming back to earth. On the 30-day front, we're seeing a pretty strong vol decrease as well. We're at a 71 this time last week, 62.3 this week. So coming in nearly 9 points. And then the hodlers, they're still hodling, but maybe with slightly less optimism this week, listeners. 74.25 this time a week ago, 72.75 this week. So down 1.5 points on the 6-month vol. Let's go out to the Skew front and see what's cooking out there. Last show, they were still pretty bearish on the weekly Skew front, -5.25. They're still hanging out at a fairly bearish level, actually, which probably reflects the fact that we are still down on the week right now. It was at about a -4.5 when we kicked off the show out here, listeners. So weekly Skew still hanging out towards the dark side. Let's see if that's the case on the monthly Skew. And the answer is yes, -2.5 this time a week ago, -3.75 this week. So slightly more bearish this week, which, again, kind of interesting. And the hodler has given up some of the ghosts this week as well. They're almost at a +5 this time a week ago, +4.9. This week, 3.75. So Skew coming in pretty much across the board and looking slightly more dark side, slightly more pessimistic, with the exception of the weekly Skew, which is close to unched out there. Let's keep on rolling some of the other digital assets that we were just talking about with Kristen, then we'll get out of here for this week, listeners. Solana kind of treading water this week as well, 144.60. Last week, 143.35 this week, so down a whopping 1.25. XRP, like we said, continuing to climb a little bit out there. 56.8 cents last week, 60 cents even this week, up about 3.2 cents out there on the week. Doge, our old pal Doge, 10.5 cents last week, pretty much 10 cents even this week, so down a whopping 0.5 cent. Litecoin, 61 2/3 last week, 66.43 this week, so it's up pretty much 4.75 on the week. So good week for Litecoin. Cardano, 33.8 cents last week, 33.5 cents this week, so down a whopping 0.003 on the Cardano front. Polkadot, 4.57 last week, 4.45 this week, so down about 12 cents. And everybody's favorite, good old Shiba Inu, a whopping million zeros, 1.376 last week. This week, another million zeros, 1.363. So unfortunately, you know the deal by now. No Shiba Lambos this week either. All right, listeners, that is going to do it for the crypto rundown this week. Also going to do it for us on the network today. But stay tuned. We'll be back throughout the rest of the week with your usual array of content, including Options Bootcamp on Wednesday, a show that every listener of this program should be listening to. It will definitely help you get up to speed in the world of options and just get more familiar with a lot of the terms that we throw around here willy-nilly on a show like this. So check out Options Bootcamp if you haven't done so already. Of course, Thursday, This Week in Futures Options, a show a lot of listeners of this show should be listening to as well. The other show where we really get into crypto in a decent amount of detail, depending on the week and the activity out there. And then, of course, Friday, Volatility Views if you're intrigued by all things vol. And then for our pro folks, we'll be back, of course, with some more great content, including another great options oddities later on this week as well. So a lot of great fun. Check it out if you haven't joined us on the pro yet, theoptionsinsider.com/pro. And we're back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.